a very special guest today. Great time actually to speak to Sunil Kaul, Asia Pacific Portfolio Strategy, Goldman Sachs, because a lot of the conversation we're having right now across the world and in India as well is focused on what is happening globally. And, even though we are now a country with a huge force in the term in the context of domestic investors, yes, what Jerome Powell says at Jackson Hole does matter. So with that setup, Sunil, great to speak with you on NDTV Profit, and absolute pleasure to have you on the show and get your view on what's happening in emerging markets. But let's talk about India as well. So let's start with the foreign investment outlook for India. We've been seeing outflows. Your recent report highlights that India is one of the two emerging markets, I think, if I recall, that are seeing foreign investor outflows. Can you lay out for us why you think that is, and do you see this as a persisting trend?
Sure, Tamanna. First of all, thanks for being on the show. I would say, look, I think in terms of the foreign flows, you're right. Like India has been seeing foreign outflows. I think the month to date we have already seen about 2 billion foreign selling from the July peak. It's probably around 3 billion selling. But I think, as you mentioned, we also have to look at the broader context in terms of what's happening around the globe. So obviously, we had a lot of volatility in the markets in July and August. So if you look across the region in Asia, but also broadly in the EM, we have seen close to 18 billion selling in the markets. And so I think India was just a part of the global risk off. What we are hearing also from the clients is that even though markets have recovered in August, people are still kind of de-risking across the regions. We are not seeing it just in India, but also in Taiwan, in Korea, in China, onshore markets as well. So I think it's a part of a global sell-off. And to be fair, I think India, in fact, has been outperforming in performance terms, both in July and August in general. And I think that just shows India's resilience in the face of the global sell-off. And so I wouldn't sort of read too much into the global sort of outflows in India. It's just the broader de-risking in the region, which India is also a part of.
Okay, fair enough, fair enough. So it's part of the bigger picture. But then two things that you hear very often, and not only in the context of foreign investors, to be honest, but yeah, in their context as well, is about some concern about valuations. And now we have sort of become a market, and like I mentioned in my opening comments, driven by domestic investor liquidity as well.
Of course.
Is there a sense of discomfort there in your conversations?
There is. I mean, in fact, I think valuation remains the topmost, I think, concern from clients in terms of India's sort of story. I think the great fundamental story is pretty well known, but I think the greatest pushback we continue to see around valuations. But I would say a couple of things on that, Tamanna. One, I think if you just look at the aggregate market, Nifty is trading at roughly around 21 times forward earnings. MSCI India is a bigger index and has a bit of mid caps in there as well, so it trades a bit more expensive, around 23 times forward. But if you look at what we think the fair value for Indian equities is based on the domestic growth outlook, global growth outlook, the fund flow situation, we think around sort of 20 times forward earnings is a fair multiple. And so I would put India's valuations as richer, but not sort of in the overvalued territory if you look at in that context. I think it's also important to look at India's valuations relative to everything else, particularly emerging market or the region in Asia. So India is right now trading at 80% premium to the region. So the last 5 years average is around 50%, but the peak was around 100% plus. So again, I think if you look at that metric, it will tell you that India is kind of trading like a growth stock where foreign investors are giving it a premium, but it's not super expensive from that standpoint. And I think the last point I would make is that you also have to look at the valuations in the context of the market performance and underlying earnings, right? So in MSCI India terms, the market was up 20%. 8 months into the year, we are another up 20%. So the market has had like 40% plus returns in the last 20 months or so. But if you disaggregate that 40% returns into how much came in from multiple expansion versus how much came in from underlying earnings, almost 30 percentage points and a little bit more of that has come in from underlying earnings. So the multiple expansion has been only in sort of single digits. And so if you came into 2023, India was trading at MSCI India was trading at 23 times multiple. Today is 23 and a change, 23 and a half, right? So in aggregate, the multiple hasn't expanded. Obviously, different sectors have moved a lot, but a lot of the underlying move has been driven by underlying earnings, which we think is obviously a good thing to have, and which is why we are positive on the market.
Um, Definitely positive on the market, and perhaps another factor is the MSCI rebalancing, which will now kick in. And you know, your report talks about it, Sunil, where you say that you expect the largest passive inflows coming into India because of that rebalancing, upward of 4.3 billion USD. Does that then spur active inflows as well?
Um, Probably not on the back of the rebalancing, because the rebalancing is kind of more a technical event. It happens at the end of the month. The reason India is getting sort of 4 billion plus inflows is because you have 7 stocks that are coming into the index in MSCI India, and so the number goes from 140 plus stocks to nearly 150 stocks there. And so the flow is very concentrated um, in these names that are getting included. And also you have the largest largest private bank where the foreign inclusion factor was increased, so that's also driving a lot of flows. So I think it's very kind of concentrated in a few stocks, and largely kind of technical in nature, which is why, because of the index rebalancing, the passive will have to do it. But we don't think it necessarily means that active will need to follow. But I think the bigger picture here, Tamanna, is that, as you show in the picture, that India's weight in the emerging market is going to increase, or MSCI index is going to increase. So from 19% or 19.4, as you show in the table, it's going to be close to 20% of MSCI EM. And China is at 22, and so India is kind of a close number 2 in terms of the weight. So that means that it would be the second largest market in EM and very close to China. And so it over time we think that will encourage more active investors to come in and increase exposure into the market.
Yeah, that's a big one. India will be the second largest market in EM and closing in on China. Now, in your report too, and I've cherry picked the India specific ones, Sunil, if you will allow me, because you know relevant to our viewers. Two charts that really stood out for me. One is that retail sentiment is above historical levels for India. You also talk about how risk appetite seems to be waning. Now, contextualize that to us. I'm, of course, reading it together. That may not necessarily be the right way to do it, but do contextualize it for us.
Yeah, I mean, look, I think the risk appetite sort of waning is again sort of something we are seeing across the region. As I said, I think in general for Asia, for emerging market, when you talk to clients, it's very clear that obviously markets have been super volatile in the last couple of months. We also have, as you started the show with, sort of Fed policy coming in, Chairman Powell comments coming up, but more importantly, you have U.S. elections coming in in November. So I think the general sense is that markets are likely to remain volatile across the globe, and so people are generally kind of de-risking into the event, which is why we kind of are seeing risk appetite barometers, not just in India but pretty much across the board at low levels. And a large part of that is because of the foreign selling we just started the show with. But I think domestic flows is obviously a separate story, which is what has been holding up the market, as we know. I mean, to ask Tamanna, that seems like a structural trend, because as we know, India's household balance sheet exposures are still pretty low compared to sort of regional peers. 6-7% of the household balance sheets are in equity markets. In US that's north of 40%. In Europe that's 20 to 30%. Even in Asia, I think the average is more like 15%. So we think this is kind of a structural trend and it has more room to grow. And I think therefore domestic flows will continue to support the market here. In addition to that, you also got mutual funds sitting on decent cash balances, around 4% of the AUM, which in absolute terms is north of 10 billion US dollars. So you got sort of more money coming in from retail in terms of SIPs, which are hitting every month new highs. And then you also got mutual funds by themselves sitting on large amounts of cash balances, which we think will continue to support the market here. I think what it means is that in these environments of global kind of risk off, India will continue to be sort of outperforming on a relative basis, even if directionally it may be kind of more flatlining or go down, but it will still be outperforming the emerging markets, broadly speaking, over the next few months.